How have you seen the equity market in India mature and evolve over the last 30 years?
Well, nothing can replace equities actually. If you look at the last 25 years, across all major markets, India was number one.
There was a time when market was open for 2 hours.
2 hours. This 25 years, we've been number one market. Despite all the problems, we had coalition governments.
Yes.
We had the shortest government in the history of the world. We had unknown prime ministers coming in.
Equity is the only answer to anybody in the world beating inflation.
It was the BJP government which implemented quite a few capex related
Yes.
policies under Atal Bihari Vajpayee.
Yes.
I think that pushed through the economy for the next 10 years.
If India
Consumption
degrows
base.
by 2%, the world GDP will become negative.
India will probably be the second economy after China.
Even if you happen to choose the top 150th company, 150.
150.
Still you made
10x. Had you been in the 300 best
Okay.
in terms of ranking, your return would have been minus 50. In my heart,
You want
I want Indian equities to be the best asset class in the world, not only for the next 5 years, but for 10 years, 20 years, and stuff like that.
So Dinshaw, welcome to the AUM Finance podcast. As we were discussing, this podcast is about first principles. Okay, I am not going to pester you on market का क्या लगता है. Okay, we are going to talk about very basic and very deep dive into what equity investing is all about. Before I do that, Dinshaw, let me introduce you to my audience. Okay, Mr. Dinshaw Irani started. He's an MBA from IRMA. Okay. You started as an analyst with Sun FNC Asset Management Company. Dinshaw, Sun is now what? Taken over by whom?
I don't remember when they got sold off long.
Taken over by one of the four mutual fund companies. Now, and you became vice president and analyst at Asian emerging markets at Alliance Capital. Again, I think Alliance was managed by Samir Arora. Right? And you were a principal portfolio manager at SSKI Portfolio Advisors.
Yes.
From there, you went on to become executive director at Artemis Advisors. Right? Who are the research advisors to Helios Singapore.
Right.
Samir Arora's company.
Right.
And after having 18 years of experience there, you had till date 31 years of experience in the Indian equity market.
Right.
So I am going to get a lot to probe you today. Right? More than 30 years of experience. And currently, you are a CEO at Helios India. Okay, and you are on the verge of welcome to the mutual fund fraternity. We need people like you and Samir Arora to offer your skills to the mutual fund investors, retail mutual fund investors in India, and also HNIs. So welcome to the world, welcome to the mutual fund industry, and I think this would be your one of the first few interviews being a CEO of Helios India.
Yeah, I guess so, apart from all the TV channels. But thank you, Nirav, for having me on your channel.
It's a pleasure. It's a pleasure. And please, I would look forward to you sharing a lot of knowledge with our investors. So, Dinshaw, 30 years of experience in the equity market. Okay. I'll keep it free flow. Okay. Let it be very informal. Take 5 minutes and share your 30 years of experience. I know it is a big ask.
Okay, so I started off as a business journalist actually with Capital Market way back in 1990, right? And that time was the time when it was I think it was the decade of IPOs, if I may, because we were supposed to be a rating agency. I mean, Capital Market was known for its rating criterias, and actually I was an intrinsic part of setting up the rating formulae out there. Earlier it was very arbit. But then we gave it a scientific method. We had 48 parameters on which we used to rate IPOs.
Okay.
And we should come out with these ratings which were diligently followed by the crowd.
This was at which entity you said?
Capital Market, the investment magazine.
The
investment magazine.
Yeah. Oh.
And this was from 1994. I started off as an executive assistant and probably became the editor, deputy editor out there. And
oh, wonderful.
Then I moved out of Capital Market. We started our own firm, 4 of us from Capital Market. We started our own firm, equity research outfit, where I was the head of research.
Okay.
So that's the part which you missed out.
Yeah.
You started with Sun FNC.
Yeah.
So that was when we had
Capital Market Equity Research Arm, you were heading it.
No. Equity research, no. So that Capital Market was where I was doing the writing part on IPOs and industries and stuff like that. It was very, I think that was the basic learning ground for me to understand how industries are analyzed, how companies are analyzed and stuff like that. Yeah.
Yes.
So after that, four of us broke off from capital market and we started our own equity research outfit, which we call Lloyd's Securities.
Lloyd's Securities.
And we used to do pure equity research, and that's where I met Samir in '94. This was in '94, and that's where I met Samir because I used to service him as the largest fund manager.
You were in the sell side and he was on the buy side.
Yeah, he was on the buy side, right? So that's where I met him, and then I think we folded up in '98, the whole experiment, and we moved on to different places. I moved on to the buy side, which was Sun FNC. There I was there for a year and probably 3-4 months, and after that Samir picked me up from there, and I joined Samir in I think it was January of 2000 that I joined Samir in Helios Capital. I used to manage the Emerging Asia portfolio for consumers and pharmaceuticals that time. And Samir was the Emerging Asia head for Helios Capital. He had in fact moved to Singapore in '98. So he was operating out of Singapore and I was in Bombay. And then we both quit together in August of 2003. We wanted to start a mutual fund but didn't work out that time. In fact, imagine August 2003.
In August 2003, you wanted to start a mutual fund, and it happened in 2023 now.
Yeah, not 23. 20 years later, 20 saal baad. So yeah, and actually it was August only. We got our license in August of 23. So actually it was 20 saal baad.
So some things do take time.
So anyway, then I went on to SSKI, ShareKhan, that is. It was the arm of SSKI at that point. Set up the PMS division there. And then Samir started off Helios in 2005, and obviously I was his first choice, and I joined him as day one employee in 2005 itself. So that's how we worked. And actually Artemis Advisors, which was the research arm for Helios, had to be set up in India. So it had to be a different entity altogether, and that's how I became the ED there. Then we finally, I think the laws changed and we made it a whole subsidiary of Helios Singapore in India, and that's how.
Wow. Great. So finally you get your mutual fund license.
Yes.
And finally we'll get to take advantage of the great brains that you and Samir are and use your, I always say, Dinshaw, that one of the best brains in our country are in the mutual fund industry. Right? जो कुछ थोड़े बहुत मिसिंग थे वो भी अब आ रहे हैं. तो अब समीर भी आ जाएंगे, right? So if you buy your mutual fund, we are going to, one as a student of equity, I keep following both of you on various TV channels and social media and on all, and one would always wonder when will we get. I kept poking Samir last 18 months. आप कब mutual fund लेके आ रहे हो? So I did similar with Ramdev ji when he was only in PMS and not in mutual fund. So I believe now hedge fund guys, PMS guys, AIF people, everybody is now coming into the mutual fund industry. So how have you seen the equity market in India mature and evolve over the last 30 years?
So very interesting, because I remember starting off in the days when the market used to be open only for 2 hours. And it was a total outcry system.
There was a time when market was open for 2 hours.
2 hours, 12 to 2. That's what the timing was, and it was a total outcry system. And I remember one particular incident was that the heady days of Harshad Mehta. And I was walking on Dalal Street. I was going for a meeting. And the market opened. And since it was open outcry.
So open outcry is when you have to yell to buy and sell shares.
Yes, you have to yell. I mean, there were these pillars which were supposed to be stations. Like I think number 4 pillar was supposed to be Tata Steel and stuff like that. So that's how it was. So people used to gather around there and bid for Tata Steel. So that's how it was. Bid ask was open outcry. Right? So I was passing by and suddenly there was a huge roar. Like it was like a eruption happening, and I was like shocked. I said, what happened? And I thought there was some riots happening over, and the sandwich wala was standing on the side. He looks at me confused and he says, don't worry, it's a teji ka din today.
So that is what a bull market looked like. You could hear a bull market.
Hear a bull market. You can actually hear that really gave you goosebumps, So that was then, and then after that, after markets, this was in I think 1991. And then if you go behind Dalal Street, there used to be these guys standing on corners doing trades, which were like off-market deals. And you should see them. I mean, they had these hotlines which they should carry that time when there were no mobiles. They should have these Wi-Fi kind of things,
Yes.
which is to carry
Satellite
on their,
phones.
yeah, it's like on their necks, and four of them carrying them around and closing deals with across wherever. So it was fun. That was fun.
Yeah.
And then came obviously NSE. That brought down the whole euphoria to a very scientific method. I think that helped in a way because
Yes.
the market becomes much more transparent.
Yes.
With the NSE coming on online and trades happening online. So any say a foreign investor sitting even in Singapore or in Hong Kong could actually see his trades getting executed at the relevant prices as such. So that helped in a very big way. And plus, obviously, equity research during my time, and I'm talking about the 90s, early 90s, used to be a one-pager, which just used to give you the history of the company and just the historic data as such. In fact, when we started in 94, we realized that, there's a dearth of research, and actually coming from a journalistic background, we knew how to dig into backgrounds and make up projections and stuff like that. So we came up with this huge note on companies. We used to have worksheets on companies, and at that time it used to be Lotus 1, 2, 3, if you remember.
Lotus 1, 2, 3.
Not
it was
Excel.
later on sold to Microsoft.
So the 1, 2, 3.
Lotus 1, 2, 3 was created by an Indian.
Yes.
And Microsoft bought it and then made an Excel out of it.
Made an Excel out of it later, much later.
Some Kapoor.
I don't remember.
I don't know.
But anyway, so I remember like even typing that used to be 1, 2, 3, 1, 2, 3, grow and something like that. And then the sheet used to come up, which was a very unfriendly sheet. So you had to work on that sheet and stuff like that. But anyway, so that was how the evolution happened. And when we started this process, people really appreciated it. In fact, we were probably the only house which never had a brokerage. We used to actually sell our research to various fund houses, and they used to provide brokerage to other brokers, and they used to share the revenues with us. So that's how the whole model worked out for us. So it was a huge evolution. I mean, transparency. In fact, insider deals were the norm that time. Right? Which finally turned out later that
it was considered a strong point.
Yeah, that was considered. If a broker told people that I'm in touch with this.
There was no SEBI. You forgot to add. There was no security.
There was no SEBI. There was no regulator. Yeah, you're right. And I think actually SEBI's done a fantastic job. I don't think we've ever had a Madoff in India. As such, in terms of
even in absence of SEBI.
No, during that time there were a few. Like Harshad Mehta came at that point in time. But he used to, I think, use the loopholes rather than anything else. But the fact is that there was no embezzlement of, after SEBI's come in, there's no funds which have gone bust and no embezzlement of money.
SEBI is one of the best regulators in the world.
I think so. I mean, and we've gone through the whole process, right? I mean, we've for the mutual fund, the kind of in-depth analysis they did for us. I mean, they went deep in, they told us, what are these systems looking like? Why don't we have this? And it was a total hand-holding operation. In fact, 6 months they just spent with us telling us, okay, this is how you should do this. Tell us how you're going to do this. This is what you want. Tell us the system that you're going to put. And if you don't have any idea, we'll guide you on this. So it was a total good experience. And actually, when we came up, finally, when the license came in, they had already visited not only the offices in Bombay, but also in Singapore. And they actually tested each and every system. They went and asked our dealer to put in a trade. They told him to put in a error trade. And
so you're telling right now when you applied for a mutual fund license.
Yes.
Okay, SEBI visited your office. SEBI officers.
Even the Singapore office.
Even the Singapore office. And they checked thoroughly
each and every system
is in place. Wow. So that is how we have evolved. I don't think a US regulator would have the wherewithal to do that.
I don't think so.
It's easier to get a license there than to get a license in India.
I'm sure it is.
Wonderful. Okay. So we are much more mature, much more democratic with NSE coming in. Now this is my, this is how I can trade.
It's a time bomb actually.
It's a time. It's a time bomb. Okay. So now let's come to the equity market, which is your forte. I mean, I cannot let you go without digging deep into this subject. So Indian equity has done a phenomenal job. I have a view, and correct me if I am wrong, that there are only two equity markets in the world. One is Indian equity, one is US equity.
Okay.
I mean, if you consider the depth, and the kind of higher double-digit returns, maybe US has given single-digit return, but still, the kind of return one expects because of the risk that one takes in equity. So correct me if I am wrong, there are two major markets that every growing investor in India should be exposed to, and one of the major markets which has given a very high return over a very long period of time consistently is India.
So actually, you're right, Neil, because if I go back into history and if I see, so we've done this analysis for NFO. Thank you. If you look at the last 25 years,
okay,
across all major markets, okay, we comparing dollar returns of all major markets.
Okay,
India was number one.
India was number one over what period of time?
So we're talking about 25 years.
So if you go, so you went back 25 years, you did a dollar comparison, dollar returns for all equity markets, major markets in the world. India was number one.
It was 12.7 or 12.8.
12.7,
dollar
12.5% compounding.
The second best market was S&P, US.
Okay.
For 20 years, India was again number one. The second was S&P.
Right, but and the gap was huge.
Actually was I think 3% or so.
3%.
3 or 4%.
Over a 25-year period, that makes a lot of difference.
So 4% was over 25 years. I think over 20 years it was 3% or so.
Okay.
And in the 10 and 5-year period again, going back from today, right?
Yeah.
India has been number one.
Okay.
Again, the consistent return, I think the 5-year period was 13% and I think the 10-year period was 13 and 5 years was some 12.1 or something. So it's been 12 and 13%.
Yeah.
US has been in that range of 8 and 9%.
And you're talking about the index.
Index.
So India, you're talking about Sensex.
I'm talking about NSE 500.
NSE 500.
The broadest of indices.
That is a broader. That's much broader.
That's why I'm comparing to
It's good
S&P.
that you did that study. It's much broader index. Okay.
So I'm comparing to S&P 500 and
So
S&P.
let me retrace. You said NSE 500 last 25 years gave a compounding return of
12.7 odd
12.7 odd percent, which is the highest in anywhere in the world.
Right.
That also supports what
all
I
major
said.
markets. All major markets.
Okay. Then 10 year back, it was some?
Again, it was, I think, at 13%.
13%.
10 years back was 13%.
Okay.
And I think 20 years back, it was 12.8.
Okay.
Yeah? And 5 years has been 12.1 or so.
That's okay. Okay.
Yeah, we can
so it has been in early double digits.
Yes.
Okay. It has always been a 25-year period or a 10-year period or a 5-year period.
Right.
And you're not being selective, talking only about Sensex, which only represent 30 stocks.
We're talking about
Nifty,
NSE 500.
you're talking about NSE 500.
NSE 500, the broadest of indices that India offers.
Somebody growing in India in 80s and 90s and 2000 and 2010s and 2020s, if he just happened to buy even an NSE 500,
that was perfect.
Even that person got a double-digit return.
Okay, not 80s but 90s.
90s. Okay. But if you had gone to 80s, I think it would have been much more.
Then you would have been 13 years old.
Okay.
So early teens, but unfortunately, I think it was only in the period of 15 years when India was the second highest growing market. The highest was S&P again.
Okay.
And as you rightly put it, the tussle between
US and India
and US.
Yes.
And I believe that is mainly because 2008 coincides with the QE, quantitative easing.
Right.
So that's why that market looks much better. And obviously India corrected a huge.
So then let me come with a googly, Dinshaw. Yeah. Is it because of the QE and easy money over the last 10, 15 years that US has come on since the 2008 financial crisis? They have been printing money.
Right.
And in fact, I got an opportunity to ask that question to Warren Buffett also.
Oh, lovely.
Okay.
What was his answer?
he had given a long 20-minute answer to that question. And my question was Richard Nixon right in removing the gold standard?
Right.
Because that is the reason they keep printing money. At every problem, they keep printing money. Right. So, and he said that I am not very sure about it, and I am not. And then I also asked, can we move back to the gold standard? And if US moves, everybody. So that is impossible. So he said, my father was a fan of. Warren Buffett said his father was a fan of the gold standard. His jury is still not out. Okay. He's not clear. But he said he gave a metric that when Warren Buffett and this is 7-8 years back. So Warren Buffett said when he was born, till that day on which I asked the question couple of years back. The dollar would have depreciated by 94%.
Wow, I had stuck to the gold standard.
Yeah. No. Because of the printing.
Okay.
Hence, equity is the only answer to anybody in the world beating inflation. That's how we justified equity. And he said gold standard, it's very impossible to go back, but I am aware that I asked him, central bankers and especially US Fed keeps on printing dollar like there's no tomorrow.
Right.
And imagine this is an 8-year-old question. उसके बाद कितना print किया वो तो भगवान जानता है. And sometimes if there's one another crisis, they can print money equivalent to our GDP.
And they can still see the dollar strengthening against all global currencies.
Because that's an irony, right? One has to do a study on that. It's an irony, right?
Right.
The purchasing power parity terms, India should be much higher compared to this. Okay. So we are digressing.
So you were talking about the QE, and you said there's some question.
So the question on QE, thank you for pointing out, Dinshaw. The question is, if QE was not there, would US and other equity markets and Indian equity market done as well? Should we attribute some sort of success to QE?
So I had actually a big argument over this. So I sincerely believe that what the Fed did was the need of the hour.
Okay.
Or we would have been the way Japan has been for the last 40 years.
Yeah, the last 2 decades, 2.5 decades now.
2.5, much more, because you're talking about 89, they hit December 89, I remember
they hit
40,000 on the Nikkei, and that's still not been there.
So so can I come here? I'll interrupt. So Japan reached a peak in 1989,
right?
And has never ever recovered till that, even now. So many decades down the line.
Right.
And US, so what is unique to US and India? That every 5 years, 10 years, we were discussing just before we started the podcast that India is one rare market where jab paisa aaya, aap equity kharid lo.
Right.
Okay, and we have not been wrong over the last 3-4 decades. So sometimes you get scared कि जापान जैसा scenario India या US में क्यों नहीं होता है?
Okay. So I'll tell you, Japan was probably an outlier. See, their problem was they never recognized they refused to, they recognized, but they refused to acknowledge that the property bubble has burst. The banks are under strain. We need to print money. They still went with a low interest rate policy and stuff like that, which I think messed up. And that's why I like what US is doing. The fact that they realize that, okay, I need to bail my people out.
Okay.
Right? I need to
So when you see a problem, attack the problem with full might. And solve it then and there.
Yeah, and India fortunately has been an outlier. I mean, India, as I said, that this 25 years we've been number one market despite all the problems. We had coalition governments, if you remember, 8-9 of them. We had the shortest government in the history of the world, right?
We had government falling down.
We had
change in regime, overnight change in regime.
We had unknown prime ministers coming in with vague names and stuff like that.
We have assassinations.
Yeah, we had
assassination of the prime minister. We had terrorist attack.
We had a terrorist attack. We had a war, a limited 40-day war with Pakistan, literally. We had a nuclear explosion, and we were banned by the world as such. There were sanctions on us and stuff like that. So we have been through all this, right? But fortunately for us, our growth has been fairly constant, and thanks to the reforms that India has gotten
in 1991.
Yes. From then onwards, I don't think
the day you were walking on the Dalal Street, Sierra government with Manmohan Singh as the finance minister.
Yes.
That was a path-breaking event.
He was the finance minister.
That is the reason we are having a discussion also.
Right. I think so.
I don't think this discussion.
We would have been like in Argentina, running to IMF for bailouts on a regular basis.
So you mentioned Argentina and these Latin American countries, the Brazils of the world.
Right.
So Brazil also under Lula da Silva was considered a very great economy, and then something faltered. So there is something in US and India that keeps working, or every time some right things we do in spite of all the wrongs that we have.
On a lighter note, I think we've got some 30 crore deities, so there's one for every 5 Indians.
We are blessed.
We're blessed.
But then we can't tell the viewers that we are blessed. There is something right we are doing. Come on.
That's what I'm saying.
What is it?
I think it's growth. It's growth and nothing else. And the fact is, as I said, that reforms, they've been kicking in on a regular basis. I mean, fortunately, we had a Prime Minister like Mr. Modi who's been pushing these reforms. See, all these reforms that he's implementing today were the brainchild of the earlier governments, but they never could implement because they didn't have the political will.
So execution is the key.
Execution
and
is
the political will.
Yes, and the political will. And knowing that gentleman, he's just push it and let's see how it goes. Let's go towards it. And
we'll face the consequences no matter what.
Later, let's push it. It's good for the country, let's do it. So that way. So that's how it is. And I think that is what is needed.
But even before Indian equity markets were doing well, now I think the reforms that we are witnessing now under the Modi government, the positive repercussions on the economy would come for decades.
Yes, that is what I was trying to tell you.
That will ensure
next 5-10 years, I think this is what has pushed us through. And if you remember in 94 also, 2004 also, it was the BJP government which implemented quite a few capex related policies under Atal Bihari Vajpayee, and that pushed through
golden quadrilateral and
all those infrastructure projects and stuff, setting up ports and stuff like that. I think that pushed through the economy for the next 10 years, and this is what was needed. I think the first repair part is over now. Now you're seeing a push happening. In fact, I would say that if anything, came at probably the wrong time because that's when the economy was actually picking up.
Yes.
So one saw a deferment of capex at that point in time, and that got pushed out because of.
But the jury is still out, na? Dinshaw and Demon.
No, Demon actually turned out to be much better.
Actually,
turned out to be much better because I think
it slowed it down for 18-24 months, let's say.
Right.
But there is something.
I think it more helped in the equity markets because that's the culture. That's when the culture caught on.
Yes.
If you remember, the SIPs then was what 800-900 crores or something, and today there's 16,000 crores of.
And one school of thought and one very wild school of thought I heard is one of the reason Pakistan economy is doing bad is also because of Demon. I don't know. I mean, you cannot never.
I also heard that.
They had printing machines where they were printing our currency and also the jury. I mean, even 20-30 years down the line, maybe then somebody will do a research and.
Maybe.
It's not an easy thing to do.
No, not an easy thing. But all I was saying was that the capex came and got pushed out as such.
Yes.
Maybe you could have waited another year for the demon.
So, I think India here though, till 2023 has been enjoying a very high, one of the highest equity risk premium. If you invest in equity, there's a risk premium that you
Right, I understand.
And the Indian equity risk, and the Indian equity risk premium is the highest ever.
I guess so, yeah.
So, why, I'll tell you, Dinshaw, where my question is coming from. Will India experience as time passes? One, I want to know, you just gave a matrix that over the last 25 years, we've enjoyed a higher double-digit return. I don't think any market in Asia, any market in Europe, and even in US, it was higher lower digit returns, not double digit returns, single digit returns. Okay. So the question is, aage 20 saal, will my children enjoy the kind of equity returns that I've seen and we are seeing right now?
Well, I don't know about your children, but I'll tell you about where I'm going.
अगले 2-3 decades है क्या हमारे पास?
So actually, 2-3 decades बहुत दूर हो जाता है. So probably let's talk about the next decade. Okay. So let's look at it this way. India will probably be the second economy after China to offer that kind of growth impetus that the world saw when China was growing.
Understood.
Right. So. If you go back in history, India and China GDP were more or less similar in 89.
Yes. And China?
And then China moved out.
So can I interrupt and ask you a counter question there?
Yeah.
China saw GDP growth that the world has never seen over the last 2-3 decades.
3 decades.
पिछले 3 decades China के थे.
Right.
Okay, they were much smaller than Japan and see where they are today.
Right.
And it will be 2-3-4 decades before we can catch up with China and US. But the Chinese equity market, they did perform in tandem to the Chinese GDP growth, and if not, why?
So that's what I told you. That China was probably controlled currency. One was obvious, and come on, I mean, you're talking about a communist country. Who wants to control everything and stuff. India is a more
so that's the beauty that India has. The FI investors you deal with. I mean, Samir is sitting in Singapore. Okay, so you keep dealing with FI money and all. So what is the perception about Indian equity? From an FI's perspective.
So there, actually, let me tell you, I mean, in the last 8-9 months, so I also work towards meeting these foreign investors who want to come to India and stuff like that, right?
Yeah.
So in the last 8-9 months, I must have had as many meetings that I would have had in the previous 10 years.
Okay.
That's how many meetings I've had in the last 8-9 months.
Okay.
In fact, my friend from Hong Kong, who's our sales guy overseas, he's been calling me since morning. He's fixed up some meetings for November and December. I want to know my schedule.
Okay.
So that way.
Sorry to hold you back.
No.
We want that money to come here.
So that's the kind of euphoria that one has seen in our country. The biggest pushback that we keep getting, I mean, 2 big pushbacks, is one, as you rightly answered, about the premium that we are enjoying vis-a-vis the region.
Yes.
If anything, premium has expanded in India. We used to be at 30-odd%, we are at 40-odd% now.
Okay.
To the region, emerging Asia.
We are at Indian equity, is it 40% premium too?
Or to the emerging Asia region, MSCI, emerging Asia.
So that scares you also.
I'll tell you. So
is it sustainable?
My pushback here is that if you're talking about, okay, let's talk about India as a company, right? If you're telling me a company has become more efficient in utilizing its capital by higher ROCs and ROEs, and obviously the debt equity has reduced quite sharply from 1% plus to 0.5%
and the financial
minus,
situation has improved.
And improved. How do you justify a lower PE? You would obviously give it a higher PE.
Because as the market matures, and as you grow bigger.
Right.
then that P ratio falls.
Yes. So here we are having in a growth stage. As I told you, that will be probably the second economy after China, which will give you that kind of impetus in terms of
Now
global
the first
growth.
economy. Now even in growth we are beating China.
No, that's what I'm saying. After China, I mean, as in China, you gave that impetus for the last
what China did
2.5 decades.
We are having that baton has been passed on
now
to India.
to us, because China is now lagging as such. You've seen the kind of stimulus that government is giving to its
If India
consumption
degrows
base.
by 2%, the world GDP will become negative.
Oh yeah, that's what. So if you reject on negatives, you are much more convinced on your rejection parameters, right? You say that I rejected this company because of high valuation.
So can you mention some of those?
So
negatives?
I'll
What are
tell
the
you.
parameters?
So we went back in history and we said that okay, so 1/3 of the companies do phenomenally well in an index, NSE 500 to be, in fact,
at any given point of time.
at any given point, any year, in fact, and 1/5 of them do phenomenally badly.
Okay.
Any given year.
Okay.
Right? So
1/3 do very well.
And 1/3
1/3 of NSE 500 and 1/5 do very bad.
Very badly.
And
in the sense
this
that
keeps on changing. This universe keeps on changing.
Yeah, so I'll tell you, I mean, from 2005 till say 23, when we did our analysis, 18 years, 22 in fact, not 23, sorry, we took the calendar as such. And we saw that the top 150, so the NSE 500 gave a return in these 18 years of roughly around 1,006% odd. Yeah? The top 150th ranked company in terms of returns give a return of 9,800%. 150th.
Over what period?
Over 18 years.
Okay.
Yeah, this is 150th. Right?
So even if you happen to choose the top 150th company, 150.
150.
Still you made
10x that of the index. Right?
That is Indian equity market.
That's the Indian. It's so vibrant it is, right?
Yeah.
So, but unfortunately, had you been in the 300 best
Okay.
in terms of ranking, your return would have been -50.
Okay. And when you say
51.
best, your parameter is stock return.
No, my parameter is stock return.
Okay.
Purely stock
तो
return every
आपने
year.
Top 150 companies में से भी किसी पे bet कर लिया.
हाँ जी.
Still you get outsized return.
Yeah. So now that won't be possible for you because you don't know what is good, as I said. You
and
know
it keeps on changing.
Yeah, they keep changing. So you took this population of the bottom 200. There were quite a few repeaters across. So you took this population of bottom 200 and you said, what's wrong with these guys? What is bad about them? Which is pulling. So we came across 8 broad
parameters.
right?
Okay.
So one was probably the theme, which is basically cyclicality. You don't get stuck in cyclical sectors, right? Metals, commodities, they don't take you anywhere. They'll go up and down and up and down. Probably there'll be some amount of...
So Helios is ruling out cyclicals?
Yeah, no cyclicals.
Completely.
No cyclicals.
And defense cyclicals?
So defense cyclicals, actually defense has become more a structural play than cyclical now. Because I'll tell you why. So there are companies which are still cyclical.
Yeah.
I mean, if you
and that definition also.
It's a very loose
can
definition.
You define,
it's a very loose definition. So basically, I think mainly it's limited to commodities rather than. So even banks are supposed to be cyclicals, right?
Yeah,
but not in this part.
But then they are structural play in India.
Yeah, they are structural plays in India. When I say cyclicals, mainly commodities, right? Like metals.
Yeah, understood. Give it. They have huge cycles.
Yeah,
very big cycles.
When the capacity comes on,
and if your entry
fall,
and exit both is not right in cyclicals, you don't make money.
You're gone. You're stuck in that. It's like what chakra view. So,
and there are certain. So okay, why do paint companies in India or pipe companies in India? Is this phenomenon only unique to India? So you have an Asian Paints and Berger Paints of the world.
Yeah, but you saw what happened when one single big player came in and said, I am also going to set up capacities like Racine.
Yeah, understood. Yeah,
everything, huge overhang. So already these were the stretch valuations. Right?
Okay, yeah.
So my analysts have given it a 3 rating in terms of the paint.
Just because somebody announced you'll derate the stock.
Not derate. The growth rates also took a tank, right? And plus the commodity. And where is the USP? So if you tell me that I'm a paint guy, I can command premiums over others, say ABC or whatever you want to call the paint company. Crude prices move up and the margins get hit, right? Where is that premium for the...
Then how did they compound wealth for 2-3 decades now? That couldn't be
because
so.
I think they were in a phase when there was limited competition. There were only 3 or 4 odd players. There were a lot of unorganized sector which was competing against them, thanks to the Demon and to the GST.
They did well during COVID also.
Yeah, that's what I'm saying. So because of COVID, in fact, when COVID hit, we thought that the painting will take a back seat.
Yes,
right? But they did a fantastic job of taking the mic.
So who was painting the house in COVID? Were Indians getting their house painted during COVID?
So I don't know. I think the second house is caught on, and maybe that was getting painted in absentia. So that way, but they did a good job there. Yeah, I agree on that. But the fact is that when you command such kind of premiums to the market, you better have a USP.
Yes.
Right? And your USP just can't be.
You're saying the USP is no more there?
No more there. The growth rates are no more there. So that's what my feel is. And in fact, if one big guy comes in and says, I will take away market shares, and the biggest guy around in the industry says, I will sacrifice my margins but try and protect my market share, you know you're in for a bloodbath, right?
Okay.
So why do this? I mean, just avoid this industry where there's a big question mark and wait it out. I mean, you saw that in the case of telecom, right? When Jio entered,
yes,
you saw the amount of bleed that happened.
Yes.
Ultimately,
yes,
two big guys got merged together.
Oligopolistic sector became a duopoly, and
the third guy is just surviving.
Yes.
He's just surviving, as in not even
barely
surviving.
Barely surviving. I call it a 2.5 player market.
Not even a half. I think that half is going to go short. So that's the kind of.
So Dinshaw, tell me, with your kind of experience, there are these, some people call them consistent compounders. They are these compounding machines, right? I mean, so there are these Asian Paints of the world, and none of these are recommendations. We are just discussing them, the titans of the world. So there are these players who have been consistently compounding wealth, okay, for decades now. Decades cannot be a fluke.
Right. So I'll tell you, so if you were to come back to me and say 20 years back, you identified this company and that has done well over the next 20 years, I'll tell you, you're a master at this game. But if you're coming to me 20 years later...
We are wise in hindsight.
Yeah, you're wise in hindsight, right?
Okay.
And you're telling me that 20 years they did well, next 20 years they're going to do well, not going to happen. You know it doesn't work in India.
So there's no given here?
There's no given.
In the world of equity market, nothing is given.
When you started off, you had a PE of probably 10, 11, right? And then you were having this 30, 40 kind of
growth phase came and the PE re-rating also came.
Re-rating happened. Now the growth rate is over.
But the PE re-rating is there.
Still remains.
So it's a matter of fact that the PE re-rating happens into a D-rating.
Yeah, so either your earnings has to catch up to that.
Yes.
Which looks because it's a mature industry.
So you're speaking for the entire universe.
I'm speaking of the entire universe, not only paints alone, right? I'm talking about these other guys also who are...
There's some retail guys, some MNCs.
Whatever, So basically when you're seeing others giving you much greater growth, why would you go into those stocks? I mean, money is finite, right? It's not infinite. So that liquidity flows to the best possible bet for you, right? So there may be money which will flow out into these other bigger bets. So I believe the valuations have to come off because earnings can't catch up to those valuations.
Understood.
So it's a matter of time before.
Price is earnings into P ratio. P ratio is a perception. Earnings is a fact.
If
the earnings cannot match up to the expectation, then the P ratio can fall like 9 pin.
Yeah, I don't know about 9
so
pin.
You're not,
but it'll come.
It can happen overnight. We've seen that happen. We see the perception changing overnight.
Yes.
Earnings do not fall like 9 pins.
Right, but the perception does.
Perception can change. So we should not count on that fact.
No, we shouldn't count on that.
We should not look at past data and everything has to be...
So in our case also, for us we are very clear. There's nothing like a long term.
Okay.
Right? You have to have every 1 year to 2 years, you've got to go back, look at your stock and have a relook, refresh it every year or so and see whether it's worth enough to be carried again for the next 1 year or no. If not,
every year
relook at your positions.
So then Dinshaw, tell me if
for us, a long term is going to be a series of mid to short terms, right?
Okay.
And
which
that's how it gets
relooked with a lens.
Yeah. So if it's carries me for 20 years, well and good, right? But never in my 20 years would I have looked at it as a holding that I'm going to hold it for the next 20 years. It's another holding that I'm holding for the next probably 1 year, and then I'm going to refresh my look. Obviously, interim, if something changes, I will obviously be looking at that.
But there are certain companies, so like Warren Buffett defined companies at 3 types: great, good, and gruesome. So there are these great companies who have been compounders, and we are not talking about the stock price performance. We are talking about how the companies manage its business. Okay, that is a side effect of that, the share price performance. So there have been these great companies both in US and in India. Okay, there are some private sector banks in India. I saw one of your interview where you were talking about one of the private sector bank, which is today out of favor, but it has been a consistent compounder in terms of its top line and bottom line over
Agree.
the year. There is something
Agree.
right they are doing,
Right.
which their counterpart in the public space are not able to do.
Right.
Then will you not give a premium to them?
So premium will be because of the compound, as I said, not compounding, but as the consistency. Right?
Okay.
Even today, that bank you're talking about
Yes.
is probably at a premium to the other banks,
Yes.
despite the fact that.
But there was a counterpart which is now trading at a higher or equal valuation than this. So that premium.
Part as in you're talking about a smart. I know. You're talking about ICICI Bank, but yeah, I know. But that again is because 18 onwards is given. By the way, that's one of our core holdings again.
Okay.
So 18 onwards has been giving a consistent return along. So that's why I think that.
So the re-rate, other bank has been re-rated. This bank has not been derated.
Not been derated, despite the fact that the last couple of years, the bank's performance has been still okay, right? I mean, the growth rates were 20%, now it's down to 14%.
So you'll agree there are some great companies in every sector in India. There are some gems.
There are gems, but then you can't, the gems themselves don't know that they're gems, right? Till the time
I agree.
Consistency
comes promoters
in.
have been surprised themselves positively.
Right. And you talk about great companies in the US. I remember reading that book, Good to Great.
Yes.
And
none of
those survived, right?
None of them exist.
So, and those guys did research for the last 80 years. They got data from, I don't know where all, and they came up with
and
these
by
10
the
companies.
time the book got published,
all of them.
yes. But in India there are, and other things being equal, Dinshaw, are some of these great companies in some normal sectors. There are certain sectors that you will rule out. If you do a sectoral analysis, if you do a top-down analysis और sector पहले select किया, तो कुछ sector को आपने निकाल दिया, but there are gems from that sector also. So there are certain great promoters and great businesses, both, who over 3 decades, 4 decades now have done a phenomenal job with their business. Nobody else in that sector has been even able to come close to them. So will you not give a great thumbs up to them in a higher valuation?
So I would probably, I mean, if, frankly, I mean,
Yes.
ultimately, I'm responsible for others' money, right?
Yes.
So I will be more than happy to give them a good valuation if my growth rates are assured. See, just because you're a good management and you've done well in the past will ensure you some amount of valuation.
Yes.
But to get everybody excited in the bigger scheme of things, you have to have earnings growth to kick in, because ultimately markets are slaves to earnings growth.
Yes.
If your growth is lower than that of the index you're tracking off for
Then
that
what
matter
period
country.
you look at? I mean, maybe 1 or 2 bad quarters.
So 1 or 2, that is okay. That is okay.
1 or 2
as long
bad
as
years.
as long as I can justify, like in the case of HDFC Bank, which has been our core holding for a while now.
And a disclaimer: nothing is a recommendation.
It's not a recommendation at all. I mean, it's not. I'm just giving you an example.
Yes.
Like last couple of years has been bad for them.
Yes.
Right? Now the fact is that they've been bad because of a reason.
Yes.
There's been a change of management, as in the top guy changed. Aditya Puri moved out. Shashi Jagdishan came in. So that way the ship is now getting revamped. Right?
Yes.
And it's a big ship.
So it's a transition phase that the bank is going through. There's a merger pangs.
Right.
So
plus the merger came on, which is again a very huge merger.
But that doesn't take away from the greatness of the...
Doesn't take away. I think it adds to the greatness of the bank. In fact, if things work out the way they're planning out, it should look good. So that is what you try to understand, right? Is it making sense? Does it justify you to carry it forward again? Okay, I have a visibility of 1 year that things look brighter in 1 year, so I'll carry it forward.
So Dinshaw, I have a metric for that. I always ask कि वो business को बुखार हुआ है कि कैंसर हुआ? बुखार है तो it will be out of
favor for a while. Cancer was out.
और वो opportunity भी देता है आपको खरीदने का.
Right. True.
So and it's not easy to sometimes judge कि बुखार है कि कैंसर है.
Right. True.
But then you have to take a call based on that. तो बुखार है तो you'll stick around. You never get such great franchises. You never get at these valuations.
True.
Unless there is something wrong temporarily.
Right.
Which is a bukhar.
True.
Okay. What is Helios Philosophy? You would be 45th, 46th AMC in India?
I think 46.
Around 45, 46. So what is unique? Why should investors come flocking to you?
So I won't say flocking to us.
You want that, right?
Yeah, I would love it. I would love it if they come flocking to us. But the fact is that the team, right? I mean, we've been together for ages now. In fact, Samir and me go back to 94.
Right.
My head of research who's Abhay Modi, he's been my colleague from 94. Our CIO, Mr. Alok Bhal, he's been a day one employee in Helios in 2005. In fact, he was based in Singapore and now he's relocated to India as such. So it's a very cohesive team which has worked together for over a long time. Yeah, over decades. I mean, like 18 to 16 together. In fact, I've worked with Samir for over 20 years now, so 23 to be more precise as such. But the fact is that the philosophy that we are coming out with has been a philosophy that we practiced all over our investing.
So what was Helios managing for the benefit of the viewers before you became
when we started off in 2005, we came up with offshore fund, which was a long short fund.
So offshore fund is a fund that raises money outside the geography of India and invest in Indian equity. That is what Helios does.
Yes.
You don't invest in any other geography.
No other geography. We only invest in
Samir only invest in Indian.
Yeah.
Okay. So
we have a offshore fund, but that's a very close fund. I mean, that's about Samir,
much smaller portion
the employees and the friends which invest only in the US and Europe as such. But that's only for our personal money that we want to move out.
But your forte is
offshore fund. Offshore fund.
Collecting it and investing in Indian equity.
So that was that's our flagship. That remains with us all along.
This is what a PMS, AIF.
This is not a PMS. It's an FPI.
FPI.
Right? Done. So in 2010 December, we were approached by ICICI Prudential, and they wanted us to set up a PMS along with them on their platform, our advisory. So what we did was, since we were running a long short, we took the long leg of the long short and we implemented that as a long only PMS. This was in December of 2010. 19 we got our own license for PMS. So we let go of that relationship and we started our own PMS in 20, right? And then it was the same product.
For Indian investors.
For Indian investors, same product. Even the domestic PMS was for Indian investors, which we started in December of 2010. Then 20, we started our own PMS. Some of the PMS clients told us that they don't like shares reflecting in their names. So why don't we come out with the AIF structure? We applied for the AIF license and we got that too. And we implemented that in 21. And simultaneously, we applied for a mutual fund license. So that AIF also that we implemented was a replica of our PMS. And then, obviously, we got our mutual fund license in August of 23. And we coming out with a new product, which again...
changed. So the clothes have changed. Helios under Samir Arora and under you, Dinshaw, they've all along been hardcore investors in Indian equity. More than 2 decades in the form of an offshore fund, then starting in 2020 in the form of a PMS, then AIF, and now mutual fund. So the outer structure has changed.
But the philosophy is the same. Core to our beliefs.
What have you learned about Indian equities over the years?
Well, nothing can replace equities actually.
There's no alternate.
No alternate to investments and equities. In fact, even if you time your entry wrong, and if
still you'll make money in India.
You remain long enough, you'll still end up making money. Long enough depends on what time equity takes to beat debt.
But eventually
you'll beat.
And will you rate Indian last 2 questions. One, Indian equity as an independent asset class. When do you see that happening? China plus one is playing off in the economy side. It's time now that these gentlemen sitting in the Western world, they recognize that Indian equity is a separate asset class. Don't you think so? One. And second, I'll come to the second question.
So I'll tell you, that's already happening actually.
That's already happening?
Yeah, that's already happening. So I'll tell you, the comfort that they get nowadays, as I was telling you, that the fact is that the pushbacks are, so one earlier pushback used to be that we buy and we pull the market up, we sell and then we pull the market down, and we push the market down. Now things have changed. Right? You saw that last year itself.
The SIPs of the mutual fund.
20 billion selling last year and 26 billion of buying from domestics. That was a huge impetus that these guys were waiting for. And they took away a big positive from that as such. And already you see that 2 billion of SIP, you add the EPS and EPFO and NPS and all these guys, you're talking about $2.5 billion of flows on a regular basis.
So we are slowly and steadily becoming less and less dependent on the FI money.
And
FI not yet fully discovered Indian equity.
Yes, they have.
वो लेग तो आने का ही है. जैसे कौन, I think राकेश भाई बोलते थे, राकेश झुंझुनवाला, कि गोरो ने इंडिया में आए कहाँ आए?
आए नहीं वो भी.
अभी पूरी तरीके से नहीं आए.
Right, true.
So then we are, I think the next decade belongs to us. Will Indian equity, now, okay, that was the last question. Will Indian equity, will you rate it as amongst the best amongst the top 5 asset class in the world for the next decade? This includes everything. Okay, Dinshaw. It includes all equity markets in the world, including US. It includes, forget about the one-off cryptos and जो एकदम से pop होता है और चला जाता है. वो भी 10 years structural नहीं रहेगा.
In my heart,
you want
I want Indian equities to be the best asset class in the world, not only for the next 5 years, but 10 years, 20 years, and stuff like that. But I would say that at least for the next 5 years, I think we are there.
And it will be a huge portion of your own personal money.
Yes, definitely. It's like probably 90% of my.
You will bet, right? How much?
95% would be in
Indian equity, right? Why should we?
Why should I go out? So that's
what. Or home country bias nahi. It's not a home country. We are biased for a reason,
so
right?
I did my LRSs when Indian equities were looking pretty bad. I've been talking 18, 19 and all that. And I invested outside. But after that, I've stopped.
फिर के पता चला मैंने कहा कि यार यही है. So it's like that the book The Secret, right? घूम फिर के पता चला you are positioned and you happen to be in one of the best economies in the world.
Yes. So
और आगे the path is still, अभी टनल खत्म नहीं हुआ है, आगे बहुत
huge growth potential lying ahead. So.
Great. Throw some light on how Samir Arora thinks about equities.
So as I told you, his way of thinking is very different. I mean, in fact, I remember when I joined him in Alliance in 2000, he said, don't get confused. I don't want you to identify good stocks. First, you be very clear that you be clear about what stocks to avoid, which groups to avoid, which valuations to avoid, which industries to avoid.
First, like that Ishwara example, पहले eliminate करो. कहाँ नहीं जाना ये पता करो.
Clutter निकालो. You remove that clutter.
Then you are left with a very small
portion
universe.
Which will itself tell you that things are. In fact, he tells us that. So I told you 8 parameters of rejection, right? Last one is valuations.
Can you elaborate those 8 parameters?
So I told you that first one was themes, which we got stuck on.
What themes not to invest?
Yeah, what themes not to invest. Second is dynamics of the industry. For instance, like say a HPCL or BPCL kind, where you know that the government intervention plays a huge part in
anything can happen overnight, a negative regulation.
You avoid those. Then the industries which are going through disruption, like say autos or for that matter diagnostics and stuff like that, you avoid those. Then fourth one is obviously management, which is very clear, right? Nothing good can come.
No compromise on management.
No compromise on management. So that's out. Then the fifth one is corporate governance. Again, people believe that corporate governance is, if the group is good, the corporate governance doesn't work.
Just because it's from a Helios group doesn't mean कि हर एक company का corporate governance
अच्छा होगा. So you have to be very clear about what within the group.
So one of the very Helios group, their financials never pick up, right? You know what I am talking about. I mean, it is one of the best ethical group out there, but some of the financials में कुछ.
That's the example whom I give on the sidelines.
Without naming,
So that is one. Then the sixth one is financials. You have to have clean financials, because if you try to hide
balance sheet, you're saying more on the balance sheet. The balance sheet
has to be clean. In fact, we tell our analysts that dig out the landmines from the balance sheet, because the landmines are invariably in the balance sheet and not in the P&L. Once you make sense of the balance sheet, you can easily derive the P&L. You can easily know that these numbers were fraud, right? So that's what we tell. So
start from the balance sheet, then go to P&L.
Yes,
not the other way around.
Not the other way around. Start from the balance sheet. And then you go down to something which we call as medium-term triggers. That could be...
Which one?
Medium-term triggers. That could be M&A activities happening. You saw in the case of 2 pharma companies.
Some spatial situations and all.
Some spatial situations happening and stuff. So you rule them out. And the last one is valuations. Now, the beauty of that is that we don't want our analysts coming back and saying the valuations are cheap, but the management is bad. And we tell them, hang on, the valuations are cheap because
that has already been filtered out.
The management is bad, right? So now everything is filtered out. Now you tell me what the valuations are.
Wonderful.
Right? So that's how we work. So
great. Dinshaw, it was a pleasure. I mean, I can continue, interviewing and probing into your mind, your equity mind for another 1 hour. But I know your time is precious. You're launching a fund. So once again, welcome to the mutual fund industry. You and Samir are going to do a great job. We need minds like you in the mutual fund industry. Let the smallest retail guy also take advantage of your whatever knowledge you all have gathered over the years. Thank you for being on.
Thank you. Thank you. It was a pleasure being with you.
Same here. Thank you.